Hello, everyone. This is another edition of Stop Losing, Start Trading. Ticker is Bitcoin edition. So, this is something we do at the Panoptic team where we go over the Panoptic interface, but also I'm trying to teach Rosalie how to trade options, how to trade meme coins, how to be a better trader overall. So, the journey could be with all of you guys trying to learn how to trade options, but also do it in a way that is sustainable and a little bit more sure. We always want to put the odds in our favor. Everything we say, of course, is not financial advice. Shouldn't take this as any recommendation for trades. We also discussed this in the open. This is financial entertainment and not trading advice. But yes, overall, yeah. Maybe how have you been, Rosalie? So we've skipped the lesson on Monday, but the portfolio of intern is doing pretty well. But yeah, how have you been?
Good, yeah, I'm doing good. I was following the market, a little bit of drama over the weekend on Solana with Jupiter, but it isn't looking too bad. I don't know. I
Do you
think
think meme
maybe
coins will come back to be as strong as they are?
I think so. It's I know I think people, meme coins are always really risky, and people always are looking for something to be like, crypto's a scam. Look at this, look at that. And I think it's just, it's decentralized, and there's always things that can go wrong, and rugs happen all the time. These aren't rare, occasions. And so you have to do your own research. You can't invest money you're not willing to lose. And yeah, I don't know. I don't take it as serious
Okay,
as
yeah. I mean, lots of money has been exchanged, lots of backdoor deals and insider deals as well. Again, I feel like I said it early on. The Trump token was probably the Pico top. Argentina's president is famous, but not as famous as the U.S. president. So anything beyond that is less. But yes, let me maybe meme coins based on personalities, based on bad behaviors. Definitely something not something we recommend, but meme coins based on community engagement building. This is something I can get behind, and the ticker Bitcoin is definitely part of that. But yeah, um, maybe for now I'll just go over the markets a little bit. Maybe we'll have a look at the ticker Bitcoin. If you remember, we had a trade that worked for us. We were bullish Bitcoin, ticker Bitcoin, price moved up. We closed that position, so now it's a good time to redeploy. The market has been going sideways. This is the same story every day and every week, it seems. Even though there is some price moves, you scale back. After that initial price dislocation early February, it's been fairly stable. This is good when you're a options trader that is short volatility. You don't want to see the price explode. You want to see it be range bound, whether it's going between 2600 and 2800. It's still pretty easy to manage. So ETH price fairly stable when you zoom out a little bit. Bitcoin price as well, not quite at the all-time high again since the last few months. It's been going down and steady, but overall, nothing to be worried about. Not mooning, not crashing, pretty range bound. Since we're doing this, let me look at the ticker Bitcoin again. The how quickly a meme coin gains TVL means that it can also leave extremely quickly as well. If we zoom out, this is a granddaddy of meme coins. Harry Potter, Obama Sonic 10 Inu, launched in May 2023, so almost 2 years ago, has had its ups and downs, but still pretty actively traded. One thing that we also have to look at is the price with respect to the ETH pair, because this is the pool we're in. Even then, it's actually fairly healthy. No huge pump and dumps. At least it's somewhat organic. So this is a good meme coin with a good track record. It trades well on mainnet, and that's going to be the one that we'll look at. But yeah, maybe also when you look at that chart, you mentioned earlier, yeah, sometimes you have to price things in ETH or the ratio similar to Bitcoin. These two lines, I guess, both of them are closely. But yeah, how do you feel about the price of ticker Bitcoin?
Yeah, I feel pretty good about it. I think right now, since it's kind of low, it's a good time to buy. So I'm guessing more people are gonna buy in, and it'll go up a little bit more around ETH Denver time. And I mean, it looks like they have a really good ratio, right?
It's tracking pretty much the price. So one of the so there's a term in again trading and more generally. There's a beta component. So one asset, when one asset moves, the other moves in cohort perhaps or in a position to it. The beta, this is the correlation between assets, is very important. The what we see is that the ETH dominated price and the cash dominated price are fairly constant. So people probably trade this as a kind of medium to high beta to ETH. But then that's why we see these correlations. Back to the trading interface, we'll go over our existing portfolio that the intern has had. But yeah, for now, this is good. There's one key thing that I'm going to share with you guys. This is a sneak peek of the redesign of the main landing interface. And let me make it less big. But yes, a lot of what we got in terms of feedback is that it's a bit bare when you have no wallets connected. So we tried to make it a bit more useful. So you have the past trades here at the top. You can spy on people, what they've done. We have a very complete description up front so people can understand how Panoptic works, options in a way that is different. We try to make it easy. Good go from your portfolio. We have a few features here soon. Migrate from Uniswap, the Grow app, and also Options Vault. This is all in the pipeline, but you have this button here. We can see the markets right away, what's going up or down, where are the juicy yields, and then we'll probably have the leaderboard and top trade of the week. But yeah, that's kind of the new landing page. No wallet connected, you see this. So first, how do you? Yeah, it's the first time you see it, Rosalie, as well, right? What are your impressions?
Yeah, I think it looks a lot more lively. I love that you can see what other people are trading, get a little bit of inspiration, and understand our features a little bit better. It looks nice.
And are you a dark mode type of gal, or you like the light mode version?
I am getting used to dark mode now. I used to be light mode, but I think dark mode looks a little bit more fun and crypto like. I think.
Exactly. So again, that's my thought as well. So this is almost looking also better in dark mode. So we'll keep dark mode for now. This is the part where we go over the intern accounts trading. So from again, we can start even from there. So from the home page, it's going to be very easy to go to your portfolio. There's going to be a button here at the top, or go directly to the Super Bowl button. Oh, all right. Maybe not. But yes, we'll do this. This is the intern's portfolio. I was there before. There we go. This is the intern's portfolio. We're spectating, so we are spying on people. If you are trading as well, we can spy on you. So be on your best behavior. Is anyone in the audience? We had several markets that we had capital deployed. We closed the tail behind our legs, the cult put that we purchased at a loss. And so fortunate that happens. We also closed the Bitcoin one that was at a gain. So that's kind of something that balances. We want to have now maybe a new option in the Bitcoin part because we have some funds available, about $500 worth of capital. Might as well use it for trading options. And yeah, do you want to see the other positions, or you want to create a new one first, Rosalie?
Let's check in on the old positions.
Okay, so I switched to being cash, which is a bit easier to see. Everything is positive, which is great. The BTC ETH and the USDC ETH are the bigger markets that we have. We'll go to BTC one first, and you can go from the details page very easily. One thing that is important about that specific trade, if you remember, this was a bearish trade on the ratio of Bitcoin. And yeah, what do you see? What do you notice when you look at the screen now?
Yeah, I mean, I remember we replaced some misplaced liquidity, and so we're earning some fees for that now, and yeah, it's looking hasn't moved too much, but
Yeah, and
still in the green.
we capitalize on a downside move, and these type of trades you want to position yourself so that it's neutral to bearish if you're bearish, so that even though the price did go up, starting point was this thin line, current price is a bit higher, you're not subjected to huge losses. In that case, we earn some premia because that position has been in range the whole time. So the premium, you get paid for this. So the longer we wait, the more funds we get. And the price has been neutral, which is not against our bearish sentiment. And I would say that we probably, yeah, when we did it was last week, so nothing really crazy has happened in the ratio either. So it's one of those things. This is 14 days, maybe halfway through our initial assumption of a monthly option. We're still in range. We're earning 18% more on that leg that we sold. I think I covered this on Monday, but this is actually pretty standard. Nothing to do. Let's wait. All right. So that's one. That's great. Let's go to
Sounds good.
the ETH USDC market. We had two positions. And yeah, what do you see? Is there one in particular that you notice, or which one do you want to look at first?
I think the earlier one. Let's look at the 12-day.
Yeah, 12 days here. And if we look at this row, it's gaining 1.5% in terms of P&L, $30 made. The other quantities out there are also very important to scan even before doing into the position. The position requirement is how much of your capital is set aside to back that position. So it's $450 out of about 10,000. So it's 5%. This is good. Streamia is how much you earned in terms of price of fees. 30,000 Streamia, $300 in P&L. What we get is mostly Streamia. And the delta, if you can you remember what delta is from what we discussed?
Yeah, delta is the probability of your bet being correct.
Exactly. However, this is for single legs. And what we have here is two legs. And I'll go over that too. But each leg has its own delta. The sum of the two, in that case, is 0.04, very, very small. So this is a bit of a gotcha question. But looking at the actual P&L of that position, right? So we have two options that are right on top of each other. We started, the price moved a little bit up, but stayed pretty neutral. Given this is a delta neutral strategy as well, we want to be in that range. So this is working well for us, and it's earning fees the more we wait. The delta as well is where the slope or how sensitive you are to price change. This is the first, maybe more fundamental definition of delta. This is also flat or zero point 0.04, very small. Each leg, they have their own deltas. One of them has a delta of 0.52, the other one of delta of 0.48. So the second definition, which is a bit more advanced, is that leg here, which is a put option, has 52% chance of being in the money or kind of wrong. The call has 48% chance of being wrong. The two together adds up to pretty much zero. You can add them, but yeah, each one has 50-50 coin flip. If we stay in range, this is what we get. So this is good. Again, what we want to see is price being in range, earning fees over time where there's nothing to do. As long as the direction is neutral, which is what this trade is, yeah, nothing more to do. So this is a good trade. Um,
Good.
yeah.
Yeah, hasn't moved much, so in range. Picked a good range to be in.
And do you remember the spread or effective spread, right? So this one has a spread of 1.036. So you earn that position earns 3.6% more than the Uniswap fees. And that's good. This is more than Uniswap. Same position. You do it on leverage as well, but same position earning more. This is great. But if you remember, this is a bit low. And the next one we created was definitely to optimize that spread multiplier. In that case, same view, the spread is 2.2x. Oh, actually, I have to look back. But yeah, 2.2x. Let's have a look at this position. This was created purposefully to take advantage of that buying demand or buying pressure. And yeah, in that case, anything that jumps to your attention from that view?
No, yeah, I mean it looks really good. It's still in range. So I remember. Did anybody buy anything from this position yet?
That is correct. So
Yeah, yeah.
this has been in range. Two legs. The two legs are in range. The ratio you see here, this one may be small on small screens, but each leg has some amount of purchasing happening on them. There's one extremely juicy one, which is the call strike. This one has a 3.3x multiplier on the fees on Uniswap. So this is huge, right? You have a call option. This is depositing liquidity. You earn some fees in Uniswap, but because it's deployed through Panoptic and someone is paying 3x, then you earn 3x fees. So that is kind of the one leg that is mostly printing money for us. The other one has a little bit of amount. You earn 2% more, but it's not as much. But yeah, this one is the money maker, the one that makes the most money.
Nice. Yeah, very good.
So do you know who has purchased that option?
No, but I know that we can check.
Yeah, that's right. We would like to find out. So one way that you can see is that there is a rectangle here, which is the amount that was sold. The shaded part is what was purchased. This is what's remaining. One view that is a lot more detailed that you can click on the strike button here. This will bring kind of a model, and we have the same kind of shape. But now we see who is buying. Oh my God, lots of buyers. What you have to notice, I'm trying to zoom in maybe so it's a bit bigger. What you have to kind of look at is that these we should have payoff. So one person sold a bunch of calls, you sold a bunch of calls as well. But a lot of what we see are these put options payoff. So a lot of people are buying puts. Oh, let me reload this. So it's actually a interesting thing to look at the users. Okay, sorry, my screen crashed. At the other users in that row because it's going to tell you like what people are seeing. But yes, you are here. There's a check mark. So you are one of the sellers, but a lot of people are buying calls. They hope this is going to go up. They want to get upside exposure. I'm actually surprised. There's like 25 people there. We can spy on them, but it seems like folks could have been buying straddles, which is neutral in assumption up or down, but here everybody is buying call options.
I know that's interesting. I feel like that's quite risky. I don't know that the price will move that much. It's a very, yeah.
So there's one person that sold. Let's look at the largest buyer, and you can also spy on them. Let's just look at that one position, and that one position will tell us maybe how long, and we'll spying. So this is again a little bit of fun, but so that particular person purchased 2.5 ETH worth of call options 8 days ago. They are paying some premium, so everything is flipped from what we see. We sell options, we see premium going up. They buy options, they see premium going down, meaning that they have to pay down to the right, which is fine, but they pay more and more every block and every trade. In that specific case, they maybe were wrong, right directionally. So they started here, thin line. It moved up from 2660 to 2710. Slight upside, still in the red because they're paying. But if they say I firmly believe it's going to go to 4K, 5K, 6K, then this could be a very juicy trade. So again, remember, it's very capital efficient. That person only had to post $900 worth of collateral to control $7,600 worth of options. So this is, we don't show the leverage, but this is about, I don't know, 8x leverage on that position. And the more they pay, the less leverage they have to kind of add to that collateral. But yeah, this is someone that was bullish on ETH, bought an option, didn't care they were paying 3x the fees. They're pretty certain, I'm sure, that it's going to go up. So that's interesting.
Yeah, maybe with ETH Denver coming up, maybe they think it'll hit 3K. Interesting.
Maybe, yeah. It's all priced in a lot, but that's fine. But yeah, this is again, if you want to be bullish, this is the one thing that adds the most to your assumption. You are extremely well positioned if it does go back to all-time highs. Again, with $900 worth of collateral, they could make 3,000, so 3x. So very, very cool. All right, let's go back to the intern account for a little bit, trying to create a new position. Again, the cult one, meme coin, Rosie got burnt, wanted to get out. So there's a tiny bit of capital. Maybe we'll revisit this, but otherwise, the ticker Bitcoin is one that has still a lot of capital. So let's go to the trade page and kind of, engineering a trade. So the same question everyone should be asking themselves is, what is your assumption on ticker Bitcoin?
Bullish.
Bullish? All right. Yeah. Very bullish, neutral to bullish, something risk managed, something extremely risky? How do you feel?
Um, a little bit of risk management, pretty bullish, especially over the next 2 weeks. I would say same with ETH. I would, yeah,
Okay.
but yeah.
So if you remember, this is a newer market. Your intern was trading on their own, so it's a bit harder to buy options. We can sell options, and again, the delta of that option will tell us how much bullishness you have. But I would say selling a put option is one way to go, and depending on your assumption, you can be very bullish and have pretty much a synthetic long, or you can be tiny bit bullish and be in the middle, or not bullish at all but just capturing fees. So in your case, if you remember delta, do you want to be right 5% of the time, 30% of the time, 50 or 95?
95.
95. So very, very bullish. Oh, no. So wait. All right. So you want to be right 95% of the time. So this is lower risk, right? 1 out of 20 you lose, but 19 out of 20 you win. If you use this as a measure of risk, it's not very risky. 19 out of 20. So the reward, the premium will be kind of low too. So you will make a tiny bit amount 19 times out of 20. You may lose a lot more 1 out of 20, but it's like a very, very risk averse trade. If you want to be a bit more bullish, you can say I'm right 30% or 50%, or you can be a lot more. If it's 50%, is a coin flip, but you make a lot more on average. And if you have some strong internal beliefs, then that's fine. You may say flipping coin 50% chance, but I'm 85% sure that would be another trade. So maybe back to the initial question, like if you want to be risk averse and 90% right, it's one trade. Or if you want to be a bit more risk taking, you can be 50% right, but you make more money.
Yeah, I think so. This is the delta is at 0.45, right? So
Yes.
that feels like not, that feels like okay.
Yeah, so 55%. So the delta, again, given the shortcut, meaning delta of 45 means that you're wrong, I guess. It's 55% of the time, right? Wait, is this? Yeah, you're going to be right 55% of the time and wrong 45% of the time. So a little bit bigger, better than the coin flip. And in
Yeah, I
that,
don't like the
yes.
coin flip. 50% isn't doesn't sound good.
Okay.
55 maybe sounds a little better. Maybe like 60.
Yeah, if you look, like you can be all the way out there, and the max profit will be when it maybe doubles or go 2.5x, and that is in that case 16% chance of doing the full profit, but it's still maybe bullish. But yeah, I would say that the 50-ish is a good balance, and this will mean that you'll be in range. Let me switch a little bit. The shading is not as clear, but you'll be in range somewhat equivalently up and down. You're in the middle. That is still 50% chance, but you make a lot more. It's at the money. You make a lot more trading fees because it starts from the middle and going up and down. You collect fees all the way. So again, that 50% delta is on the bullish side of and risk taking side of, again, being bullish. So I would say coin flip, but then if you're a strong believer, maybe the market is wrong, you think it's really going to go up, then you put the odds in your favor, and then you get paid for this because you're selling an option.
Okay. Yeah. Okay. And if I'm bullish on both ETH and Bitcoin, is this still kind of a good trade or
If
um
if you're, again, this is the ratio that you're looking at. So
yeah.
whenever I did, if I bring this back up, they are fairly tracking. So the purple line, I think, is ETH. Yeah. So purple line is ETH. They track pretty much. So I would say that whatever trade you do on the ratio should be also good on the price action. Uh, if you are very bullish on Bitcoin outperforming ETH, this is one trade you could do. If you're a bit more neutral, or at least you think that those two assets will grow at the same time, you can do one of those kind of delta neutral, or you can be a bit even offsetted and have some bullish behavior and deltas. But yeah, maybe what's your take? Do you think Ticker Bitcoin will outperform ETH, or stay the same, or underperform?
I think it'll either underperform or stay the same.
Okay, so this is a different trade too because we're trading the ratio. So if you want to be good for underperforming, you have to have some negative deltas. So here in that case, I'll do it worse. But
Or I guess underperform. So maybe it'll overperform because if Ticker Bitcoin moves just a little bit, it has bigger impact, right? Because Ethereum's
there could
priced
be a
much
lot of
higher.
more if 100 traders can move the price of Bitcoin very easily up and down, whereas 100 traders cannot put a dent on the ETH price. So and again, maybe the journey you're going through, it's hard to know and it's hard to have an assumption. The default one is to be neutral and not even have up and down. It's a coin flip anyways. That's personally a lot of what I do personally. I don't even try to attempt to claim that I know where the price is going. I just say it's neutral and the volatility is what I trade. So it's neutral, but then if volatility is up or down, there's a trade for this. So maybe the intern will have to look at all the different scenarios, but maybe the fact that we don't know whether it's going up or down, or outperform, underperform, means that maybe it's neutral. Neutral is the best way to do this. But yeah,
I think sometimes it would be fun for intern to take a little bit more risk,
yeah. So
but not too much.
yes, exactly, and the risk of that is losing if you're wrong and it does move quite a bit. And we haven't seen it yet, but it's a whole new mindset: how to manage risk, how to manage positions that went against your initial assumption. Hopefully we don't want to get there soon, but it always happens, so we have to be prepared. But yeah, the fact that we're selling and the fact that we're on that kind of short vol means that what intern could do is to maybe be a bit more aggressive in the sizing and use a little bit more the buying power. But otherwise, yeah, it's going to be what the market tells us. So lots to think about. Maybe the delta neutral is a one way or slightly bullish, but overall, this is kind of the market. Yeah, realizing a market sentiment is important. Being neutral is also a market sentiment, so it's fine to also have trades for that, which is hard to do if you are trading perps or buying holding. Being neutral is something that's uniquely possible due to options. And again, bringing it back to the sneak peek and what the new interface will see, we'll do options vaults, so where you can actually create vaults for delta neutral trades. People can participate, harvest that yield, harvest that volatility. All right. So we're about at the 30-minute marks. Thanks a lot, Rosalie, aka Crypto Queen. I think Brendan is going to be joining us for Options Hour. Hey, Brendan, what's up?
Hey, it's great to be here. Happy Wednesday.
What do you think of the ticker Bitcoin trade? What would you do being in the intern's shoes now?
Oh, I actually just jumped in, so I would be giving uninformed advice. I'm not sure.
That's fine. Sometimes the most uninformed advice are the ones you want.
I don't know. Bitcoin. What's the pair? So Bitcoin paired with what?
ETH, the ticker Bitcoin ETH ratio.
Okay, ticker Bitcoin with ETH.
We're bullish. We're bullish.
You guys are bullish.
Well,
I'll just take the opposite position to play the devil.
We were actually back and forth. We were a bit even neutral. It's actually a good assumption, a good take is that even the price of ETH now, it's neutral and it's paying off big if you're neutral. So maybe it's the same thing. But yes, meme coin, ETH Denver, lots of things that could play into the resurgence of these OG meme coins and kind of people moving away from these extremely fast pump and dump. Within 6 hours, it's all gone. It's been out for a while. So yes. All right. Thanks a lot, Rosalie. Hopefully intern will find something to do out of that. But yeah, have a good rest of the day.
bye. Thank you.
All right. And then this is Brendan. So yeah. This is the options hour part. So those that stuck around, we are now discussing the current events, the interesting takes that each one has about the market, about options in general. And yeah, so maybe Brendan, do you want to share your screen first, or you have a few words?
Yeah, we can share screen. We got some couple of announcements. Let me know if you've already covered any of this, but big event coming up here. Just published on Twitter and LinkedIn, and then of course we'll have it on Discord. So make sure to join our event at ETH Denver, coming up very soon. So in just over a week, we have some really cool partners coming to speak on some exciting panels about derivatives and the crypto space. Era is coming, XBTO, GSR, Infinity Pools, and Falcon X will all be on a nice divisive panel with lots of controversy, I'm sure. So a couple of market makers and protocols. Very exciting to be hosting this event. And then would you like to talk about the special guest, Guillaume?
Oh yeah, sure. So Tom Sosnoff, he's a market maker that made his fortune, or at least his name, market making options in the 80s and 90s. He went off to build Thinkorswim, which was purchased by TD Ameritrade. He built then Tasty Trade, which is a financial network and also a trading platform that I personally use. He's got a bunch of advice for newcomers, entrepreneurs, founders, but also kind of options traders. So it's going to be very, very fun to have in there. We'll ask any questions that kind of maybe have a crypto bent, but he's also pretty innovative and gets the crypto appeal. And yeah, if you are coming in, be prepared to ask questions if you want. I told him it's going to be a lot more back and forth with the audience. But yeah, extremely excited to have him on board for the Panopticon event at ETH Denver.
I think maybe in crypto, Tom is not as well known, but in the regular world, Tom Sosnoff is pretty famous, right?
Yeah, and he's on the right side of many things. So he was on the right side of options being kind of the next level for retail way before GameStop. He also has a good upside view on digital assets and crypto and more generally DeFi. But yeah, so he's one of those like contrarian take that's always right type of thing.
I see why you look up to him. Well, awesome. So we're very excited to have this special event at ETH Denver, side event. It will be at the Oxford Hotel, which is probably around the downtown area, I think. Not couple, take an Uber from the rodeo if that's where ETH Denver is being hosted again. But it's something you won't want to miss. We'll have lots of drinks there, and you'll be able to meet the Panoptic team in person. I think Guillaume will be giving a cool little demo of what's to come with Panoptic and the trading platform. And yeah, it'll be very exciting. So ETH Denver, Friday, February 28th. Make sure to RSVP on the Luma link that we posted on X. So I guess I don't know if you covered. I know you're talking about meme coins, but as you know, with the big Libra scandal, shall we say, over the weekend, lots has been happening with international headlines being made in the crypto sphere again. Are meme coins dead from here, Guillaume? I mean, you're just trading Bitcoin, so I don't know what you think is the future of meme coins after this Libra thing.
I know. I think I stand by my point that the Trump token was the Pico top because everything else is not going to measure. And even the Trump token hasn't done that well. Argentina's president is famous, but then not as famous as US president. And now you go down the list of all the other countries that may follow. It doesn't look good for that model of rapid launch, rapid pump and dump, some insider trading. If you look carefully, I didn't appreciate this, but the LP side of these token launchers, which is you print a ton of tokens for free. You can now deploy this in a Uniswap, in a AMM. And this is what gets traded. This is where the money happens because it's based on the Trader Joe model, but it has some liquidity provisioning. It's concentrated. A lot of it is very wide, and then they kind of they did the whole way. But you could be an LP as well if you catch this, buy the coin, or even do single-sided liquidity and buy it. And that's kind of a good use case for AMMs for sure because you don't have to have market makers making it. However, again, the way these fees are calculated, there's a dynamic fee component. And I'm sure not many people are aware of it, but it's also based on the Trader Joe model. But the more volatile the asset, there's an extra dynamic fee that is added to it, and the team gets a fraction of that dynamic fee. And there's a base trading fee, which could be like 30 bips or 100 bips, like a Uniswap pool. But then the dynamic fee is where a lot of these funds, a lot of these traders pay. And in that case, the dynamic fees is as high as 20% of the trade. So you buy something for $1,000, $200 go to the liquidity providers, and a fraction of this, which is I think 10 or 15%, goes to the launchers. So every trade you skim off quite a bit, and the trader may not see the it has a 15% price impact, but that's fine. I'm getting in. But most of it goes to the LPs and the AMM and the token launchers. So it's hard to know. It's hard to catch this up. But I think that's also maybe the reason why some of these are so profitable. Like the could be Melania token. Who's making money? I don't know if Melania Trump does, but the LPs definitely, there's a paper trail. You know who made money, who was a deployer, who gets the fees, and how big were these fees. And I'd say that the parameters are likely tuned to make it very volatile first, so that any spikes in volatility means you pay automatically 15%. So if there's no trading for a day, it goes back to zero extra dynamic fee. But yeah, so again, the whole ecosystem probably has to move on, I think, on these somewhat extractive activities. Again, secured Bitcoin is pretty much credibly neutral. They don't make money unless the price goes up, which is what you want to see. If you make money because you pump the trading activity, you fleece the retail at the tune of 15% every trade, this is not something that is kind of sustainable for sure.
Nothing here is financial advice, but great to hear. So this dynamic fee, these are the Solana concentrated liquidity AMMs, or
yeah. So I looked into it, like Metera or whoever the D-bags that were launching those. You look at their docs and their protocols, and they go somewhat in depth. So you get some of it, but I'm sure that the on-chain data is even more egregious. But yeah, they have this extra fee that is meant to dampen volatility, because the informed traders will not trade when they see a 15% fee on whatever trade they do. But if it's a mania that we see and people don't care or aren't aware and they pay without maybe understanding, then this is kind of the part that is a bit more icky in my view.
Yeah, I think that just to get in view, you're willing to pay a high premium, and so these fees are being pocketed, I think, by the LPs just for people to get some exposure and be quick
Yep.
to get into the price, I think. But very interesting. A side note, we have a tweet that has been making headlines on crypto Twitter from Dan Robinson and Guillaume Lambert. So I don't know if you want to cover any context and jump into this discussion, but
sure. So maybe initially, and then this is kind of the origin story of Panoptic and my own journey, is that I was an LP that was pretty active, and I was experimenting with the system, and I discovered many things through experiment. And that led us to build, again, Panoptic, which is options, buying, selling, very, very complete. But at the beginning, the only thing you had to rely on was the existing research, which was impermanent loss, and how kind of being on the short side or the LP side has some risks. The one key point, and you can click maybe on the last image, regardless of how you approach this, there is a pretty simple relationship between the price and the value of your LP position. And in concentrated liquidity, it's even more obvious. But the key point is that going above the range, you exit the position and you are 100% cash or USDC. So even if the price moons and goes 100x, you made money and your P&L doesn't change the further up it moves. So that is concretely what your wallet sees. You had some tokens you sold on the way up, the price moon, but your net P&L is not moving and it's constant. And this is what I had to take care of and worry about when I pay my taxes, because this is the funds that I got. How much are they worth? How much do I pay to the tax man? And that's my point is that this is the real quote unquote payoff. No risk to the upside, risk on the downside. And in that case, you can realize your loss when it goes down. You can realize that profit, but you have to know the exact numbers. And now, if you go back two slides, but the current way that people see with with impermanent loss is that you lose out on the way up because you could have made that 100x increase. And if you go through the model and the math, you say, hey, opportunity cost is a real loss. So I should have been more careful. And that's, again, a valuable way to look at it. But when you're dealing with taxes and amounts and profits, if you go in the next one, the loss that you could have made, or the profit you could have made, is not a loss. It's actually air. There's nothing there. So maybe that Dan also kind of did not agree with that take. And I tried to say that ultimately, when you do this months after months, I've been doing this for years, the opportunity cost is impossible to reconcile with your wallet balances. Whereas the real money you made, real money you lose, no impermanent loss on the upside is the only way to make it work. So again, my TLDR is that LP positions are directional. It's positive delta. You make money if the price goes up, and there's no loss on the upside. And I'll be making a few more of those tweets, but this is kind of reshaping the narrative a little bit, because a lot of folks are worried about LPing because they think, oh, I'm going to lose on both ways and it's going to be dangerous regardless of where it goes. It's directional. In Panoptic, you can be neutral, but it's a different trade. But if it's directional, you should only LP in pools you think is going to go up, or if it's not going up, you can short the token. Does many things, but yeah, at least this is not new. I've been saying this for years, but now it's just repackaged in a way that maybe is easier to digest. Because you've LP'd a little bit, Brandon, right? Were you worried from a distance, like, about impermanent loss?
Oh yeah. So I really like how you explain this and give some context of kind of what you mean by IL is not loss. I think, like, from the early days when we were LPing back in the V2 style, everyone was just trying to understand what they're making or losing. You mentioned, like, these meme coins being launched, right? And the price is just crazy at first. Either it goes way up or it goes way down. And then I was LPing in these early pools, like, from, like, within an hour when they launched. And, like, I had, like, I was just wondering how come my LP value is about the same. Like, I earned a little bit, but, like, the price went way up, So that's kind of how I was, like, learning about impermanent loss. And it did seem like a loss to me, just because I was, like, missing out on those gains. I was kicking myself. I shouldn't have, sold options with the new perspective of Panoptic at such an early time when the price was going way up. But I think it was really just confusing of what does loss mean to LPs, because if you think more broadly from economic perspective, is it a loss? Like, our opportunity costs a loss, and is it a fair kind of thing to be comparing LPs to a 50-50 buy and hold? Or is it a fair comparison, or is it even a relevant comparison to be comparing LPs to, like, this constantly active rebalancing portfolio? So yeah, in your mind, I guess, what do you view as loss? Is it only realized losses that are relevant and fair comparisons, or is it, or are these other things, like, fair but they're not relevant? Or I guess, what is the deal with comparing?
Yeah, again, the anyone that spent any amount of time doing their taxes, again, law-abiding citizen, you have to look at the real concrete P&L. Because I mentioned, it makes no sense, even though you try to apply that impermanent loss model to any trade, and it's not going to make sense. So in my mind, all of it is the realized one. The fact that it's directional is just part of the deal, and the fact that you're going to have a higher profit doing something else is also opportunity cost, but it's not concrete. And my example as well is that covered call sellers typically is on the retail side. They sell a call, they hold some stocks, but then the call gets called out, meaning it's in the money. They also think they are losing money, but the tax software and the brokerage firm gives them the real profit, which is you've made money, even though you could have made more. You've made money. So that being said, if you start from just looking at the concrete amounts and how much you receive, means that if you try to optimize for this other layer, which is opportunity cost, what could have been if I rebalance every day, how do you do this? Then it's actually a slightly different way. So, we lost Brendan.
Yeah, sorry, disconnected there a bit.
Yeah, but so my point is that the if you try to optimize for something that's not real, you probably optimize for the wrong things. So if you try to optimize something that is real, which is maximizing P&L, with my writings, you can neutralize the delta to make sure you don't lose if the price goes up or down too much, or you can use options to cap your losses. You optimize for the real outcome, so you'll get something a bit more concrete. If you try to optimize or solve a layer of abstraction above that, you may not end up with the result you expect.
Yeah, and I think like maybe the model is some models might be like, you are an LP, then like what should you do to best increase your fees? But maybe people are not necessarily like bucketed into the buckets we put them in. They're just people that want to make money or make money. I don't know, right? So it's like, what is the best strategy for you to do? And all these strategies I see as quite different involvement and cost, right? Because the rebalancing strategy costs a lot of activity to be constantly rebalancing all the time. It's pretty unrealistic for most of retail. And then the buy and hold is just something even my grandpa does, and buys some crypto and holds in his Coinbase portfolio, right? But LP is kind of somewhere in the middle.
Your grandpa has a Coinbase account?
Yes, I was actually just helping. So not my direct grandpa, but I was helping them set up some.
They put your whole inheritance in the meme coin of the day?
No, just like 0.001%.
Okay.
But no, they were buying AI coins and like they were going on Radium, so they're having me like set up their Solana wallet. It was
So buy and hold is the default strategy for most people, and you should be happy. That could be staking if it's a layer 1 token. If it's staking of a DeFi protocol, I'll be a bit careful. But buy and hold, staking to secure the network, very valid. You have analogs of that in TradFi, like buying stocks, maybe buying treasuries. This is fine. The yields you get is limited by the amount of work you put in. So definitely you would have lower yields or lower profits if you do nothing than if you do something. But it's fine. But the key point is that as you get to more and more of these advanced strategies, and in the case of options, there's so many things you can do that you can be the only one doing one strategy and still kind of arb that out. There is a lot more alpha there, but it's more active. It's not for everyone. But yeah, I would say that your grandpa or grandma may not be trading options or even being an LP. Buy and hold is definitely good for them. And then if they want to be even from there's options trade that you can do that make it a bit spicier in terms of return, but I wouldn't recommend anyone to do it if they're not prepared. But yeah, the I don't know. I mean, the impermanent loss / ways to make LPs more profitable. Maybe that has to be a bit more concrete and has tangible result. And again, I'll probably do a follow-up post again, maybe this week. But yeah, the solution of impermanent loss or hedging or risk management is also kind of simple. It's not a extremely complex Rube Goldberg machine on top. It has to be within the protocol, but also something that makes sense from a market perspective. And in Panoptic, it's capitalizing on maybe cheap options that you can buy, and people can sell more of these, and you find a market-driven equilibrium. Or even before Panoptic, you could also hedge your risk with borrowing, delta neutral strategies, and all the sorts. But yeah, the in protocol you can do a lot, and that's kind of the cool thing about Uniswap LPing.
Yeah, it is. And specifically the Panoptic version of LPing, you can do different stuff than buy and hold, right? When you buy and hold, if the price goes down, there's just stuff that you can do. You have some losses there, right? But with the I guess I'll jump to this. I don't know if I actually have it here.
Good segue, yes.
Yeah, like with this LP in Uniswap, this is a bearish LP. Where if the price goes down and you start over here, then you can actually profit off of the price going down. So here the impermanent loss is actually kind of like flipped
Exactly.
horizontally, right? Because it's just the horizontal difference of I guess what we're showing here. This is your typical LP position. Looks like a short put or covered call, same thing. Whereas in Panoptic, you can also do this type of LP where it's a short call, different direction. It's just kind of mirrored, right?
Yes. And the key point is that this is a short position, meaning that, again, you make money if the price goes down. The only way you can create that loss when the price goes up, and this is the same thing with impermanent loss, is that you have to have a short component. You have to have a borrow or a short component to flip that relationship between the price going up and making money. And in that specific case, if you want to create that position on Panoptic, you borrow 1 ETH. You borrow and you have to pay it back. And if the price goes up, the price is going to be higher than what you borrowed for, so you lose. So that's why you can flip. But the borrowing, the fact that you borrow something that has a different price at a later time is what constitutes that downside kind of risk, the negative delta that you see.
Yeah, I think it's pretty hard to explain in words. I think how this is composed in Panoptic, kind of the back behind the curtain of what this actually is. But I think what you're trying to say is this is an LP position combined with shorting the WETH token by borrowing WETH and then returning it back to the Panoptic protocol at a later time. Right?
Yes, that's correct.
So yeah, tons of cool stuff with the money market being embedded in Panoptic, where you can borrow and short these underlying tokens. It's all kind of done for you, right? You don't have to think about it when you do this bearish LP position in Panoptic, but that's kind of what's going on behind the scenes. But yeah, speaking of opportunity cost, there's kind of this new metric we've been talking about, and for those unfamiliar with it, it's loss versus Panoptic. So what is this opportunity cost? It's if you were to LP in Uniswap through their non-fungible position manager, it gives you an NFT, versus you LP into Uniswap, but through the Panoptic semi-fungible manager position. That gives you, what is it again? ERC 1155, right?
Yes.
Semi-fungible token. So same thing, right? It's the same kind of position. You're LPing in a price range. Specifically, this one is 2910 to 3700 for the ETH USDC pool. So as long as the price of ETH stays between around 3,000 and 3,700, you're earning these LP fees. So you could do the same thing in Uniswap or the same thing in Panoptic. But in Panoptic, you're going to earn at least as many fees in Uniswap, if not more. So there's kind of this very apples to apples parallel comparison, very similar risks as far as the actual P&L goes, or the delta and gamma for options terminology. But there's this higher gain in Panoptic because it's a semi-fungible token that can be lent out to people who want to do stuff with it, which in the case of Panoptic is buy options. And so kind of a case study here of what I'm trying to explain, because that probably doesn't make much sense, is this person earned on Uniswap, they would have earned $61 from LP fees. But in Panoptic, they earned about $188. And so that is like almost 3 times more on
Where's
Panoptic.
that money coming from?
Good question. Where's the yield?
Is this, where's the yield coming from?
That extra $120, right? Where that's in Panoptic only. Whereas in Uniswap, that $120 is missing. So the whole point here is in Panoptic, your LP tokens can do something besides provide liquidity. They basically have 2 functions. In Uniswap, you LP, it's to provide liquidity so people can buy and sell the underlying tokens. They can buy ETH, they can buy USDC, they can sell ETH or USDC. But in Panoptic, it gives you basically 2 options. One is you can provide liquidity, but 2 is if someone comes along and is interested in using your LP token for some other purpose, then they can come in and subsidize those LP funds plus an extra amount. So if someone is really, really hungry to use your liquidity in a different way than what they would normally in Uniswap, they're willing to potentially pay more fees than what the people in Uniswap would pay. So basically, there's these option buyers, people who want to go ultra long ETH. They want to go ultra short ETH. They want to trade ETH on leverage. They want to trade the volatility of ETH. They want to do things that you cannot do by simply buying and selling ETH in Uniswap. So Panoptic says your LP token can now facilitate this demand of options buying. And these option buyers will compensate you with not just the $60 or $61 that you would have earned in Uniswap, but they're compensating you with $188, up to 3 times more. And I chose this example because it's the high end, right? This is the maximum that option buyers are allowed to pay with the Panoptic protocol is 3 times more. But of course, this translates to a loss versus Panoptic of about 67%, right? So the Uniswap LP is losing out 67% less than what they would have earned by deploying on Panoptic.
And maybe to loop this back, whether there's impermanent loss or lever, loss versus rebalancing, or loss versus Panoptic, as in Uniswap LP, you won't claim the loss. Oh, wait, I could have made $120 on Panoptic, hence I lost 120. And it's the same. So it's a meta type of strategy-wide metric, and it's helping people understand, okay, there's different ways to do it. You could have earned more by using Panoptic, but it's again, the trader on Panoptic made that money for real. The same position on Uniswap made also that money, like the $60 for real. But yeah, the opportunity cost of a Panoptic user is again 3x more. That's very cool.
Yeah, I guess. Yeah, because if let's say the average loss versus Panoptic is like 15-20%, which I think we saw on the Beyond the Greeks yesterday, meaning that people in Uniswap are earning about 15 to 20% less than the ones same position on Panoptic. Like kind of the IL LVR thing. Would you say it's fair to say like a similar comparison is that the Uniswap LPs aren't actually making money? They're losing 15 to 20% in Uniswap, like actually losing. Is that kind of is that a straw man, or is that like an actual argument that?
No, I think again the concrete number which they see in their wallet is not a loss. But had they been doing Panoptic or trading perps or keeping their coins safely in their hardware wallet, could have been a different number. But yeah, as a conversion metric, it's very good, meaning that impermanent loss, yes, you could have hold, so that pushes people away from LPing. Oh yes, if I held my tokens and not LP'd, I would have not lost. The impermanent loss is the only way to get rid of it is to not do it. Here we're kind of magnifying the LP side, which is yes, you can do it. You can do it on leverage. We haven't put leverage into it, but if you can do it with also 2x leverage, 3x leverage, that same position on Panoptic versus Uniswap can all be 6-10x less fees, which is a bit ridiculous when you think about it. But that's kind of also all the numbers come in with capital efficiency, more returns in terms of fees, and then overall kind of better risk profile and management for Uniswap LPs.
Yeah, good point. So we're at the hour here, but this was a very interesting conversation. There will be more research put out about this loss versus Panoptic metric. We have some charts and more data to kind of back up what we're saying about these positions. So stay tuned for that. Are there any announcements or anything on your mind, Guillaume, to share before we end the stream?
No, that's it. So yeah, I guess I'll be in Denver also next week. More than welcome to attend our event or reach out. Be happy to meet any of you. Again, we're always excited to meet users. They come in with their perspective, but those that get it, meaning that those understand what LPing is, what Panoptic attempts to do, they are extremely valuable to speak with. So again, if you're in Denver, feel free to reach out. We'll be happy to meet you.
Wonderful. Looking forward to it.
All
Thank you
right.
so much.
Yeah. So